Alright, what's up guys? Baller Trader back again. And we're gonna go over this is a little special segment because I just got like the perfect setup. It's nothing groundbreaking, but it's gonna be interesting. It's gonna be something that I think is really cool because I've actually it's gonna be working in hindsight, but it's actually not hindsight because you'll see what I'm saying. Because look, man, what were we saying uh on 9:15 right here? Hold up. Let's get right into this shit. Where's my verticals? Yo, can I get a vertical? Oh, there it is. All right, so right here, 9:15, you can see it uploaded on my YouTube. Even if you don't even want to watch the 10-minute video, you can just look at the title. It says "Looking Higher IMO." In my opinion, we're looking higher. We outlined some reasons like this bullish order block on the daily. There's a bullish order block on the weekly at 2:30. So basically at 2:30, we're saying looking higher. At the end of that video, you can see me say give a target of 270 to 275 on Bitfinex, which is this weekly order block, which is perfectly hit. So that basically over a month ago, we framed the market in these lower and upper bounds. And I never once talked about shorting, never once said, you know, we're looking to short. It's always been long, right? And we can see from 9:15 the effect of our analysis, and that's going to be the topic of today's discussion. It's going to be this magical force that we can get in line with, and it can frame our trading decisions and make life a whole lot easier. I mean, virtually every single big day was a green candle. So there's basically no money to be made shorting unless you got like in and out at the exact perfect time, right? So obviously, yeah, you want to go with the magical force. That magical force is liquidity. And ICT says that price seeks liquidity. Chris Laurie says that volatility is a function of liquidity. And, me, I don't think I'm as smart as them, but I think that when I understand something, I can kind of, internalize it and I can explain it like a stupid person would explain it. And that's what I'm going to do today. And it's pretty neat that it worked out. And maybe we can do some forecasting and just try a little exercise, see what happens in the future. Um, so yeah, let's go with it. First off, what is liquidity? A definition that I made up right now is that liquidity is the capability of the market to facilitate both buying and selling of any asset or anything really. So if something's liquid, you can easily buy it or sell it at a given price. If it's not liquid, well, then you're going to get volatility because price is going to seek that liquidity. But we'll get into this. Okay, so we have liquidity here, right? What is liquidity? I mean, okay, so we're saying liquidity is the capability of the market to facilitate both buying and selling at a given price. So what that means is ranges are liquid because if we're working in this range right here, right? Say you want to buy Bitcoin, right? You have ample time, and I mean, if you want to buy Bitcoin, you're going to get it at a range of 226 to 232, right? So at any time within this 2 week period, you can get Bitcoin for 225, and boom, it's liquid. If you are on the other side of that transaction for any 2 week period of time, you can sell for 232 to 226, and you can easily make that transaction happen. But what tends to happen is that one side of the market will dry up, and that will create an illiquid movement or an illiquid scenario, which is going to create volatility because price is going to seek new liquidity so that it can facilitate both buying and selling. So, how can I say this? It's liquid, right? So people are buying here and they're selling. But soon, there's not going to be any sellers. Anyone that's sold here is going to have a liquidation price here or a stop loss above the market, right? Just as anyone that is buying here is going to have a liquidation price down here or a stop loss down here. And also, another party, the people that are uninterested at this price, are going to be interested at higher or lower prices, and they can, express that interest in the form of limit orders or FOMO, panic market buying. So they can place their limit orders here if they are uninterested at the current liquid price that's going on. So what that's going to do is that's going to, once there's buyers overwhelming the sellers, there's not going to be any sellers. So the people that have already sold, what is here? This is liquidity, right? Because people are willing to trade here because that's where they're going to get liquidated, stopped out, or that's when they're going to psychologically, or maybe fundamentally, technically, that's when they're going to want to place a trade. So as price moves up, it's not going to stop until it can get to a stable level where buyers and sellers can both be offset. In a case like this is illiquid because there's only buyers, and the market is not going to stop until it reaches a level where people are interested in selling. There's just not going to be any bids that are going to be matched with sells until the market gets to a liquid or an area of liquidity. And that is basically that's basically what I want to talk about. So it's just the liquidity. So we're basically just looking for liquidity. Where is it? And we're looking for how to tell if we have we want to find out if the buyers are going to win or if the sellers are going to overwhelm the market. Another thing is that once price goes up a lot and it runs up into this resistance, the market has already moved a bunch and a bunch of buys have been taken here. This is a weak, inefficient move, and so the more it extends, that means that the more buyers are actually being taken out of the market because they've already assumed positions, and it's going to run into an area of kind of liquidity where the sellers can actually match the buyers, and so it'll stall. But once say we extend up here, everyone's already bought. Price is going to have to move down into an area of liquidity so that there can be more buyers. And I think that's what's going to happen. And a level that I like is like this thing, this right here. I mean, it's not a magical science or anything, but it's like, it's just wherever they're, well, I guess it's kind of just like the upper boundary and the lower boundary of a range. We can see that this is a trading range, this is the upper boundary, this is a trading range, this is the upper boundary. And the price likes to come down and test those. I do still think Bitcoin's bullish, but it did extend a whole lot into this weekly order block, and now it's showing signs of stalling. And so if we're using that liquidity concept, is price is going to seek liquidity, I think the liquidity is going to be at the top of this trading range that we can see here. And so if this were to move, I guess let's just assume that it's going down. Price is going to go down because there's going to be no more buyers, and price is not going to stop until there are buyers. And there's not going to be any buyers until the market reaches an area of liquidity, and we can kind of map out the liquidity by kind of looking at the trading ranges and observing the price action in those consolidations. And I guess that's all I wanted to talk about, I guess. I think that, we're still bullish, I would say, but we have moved quite a bit, 228 to 275, so 40 something, 50 something, I don't know. Even more on OKCoin. And so I think that this is just very extended and it's illiquid. So if price was to go down in here I think it could fall until it hit an area of liquidity, and then we would be looking for a reaction at that level. And if we could see the reaction at that level, then it could be a good time to go buy and go for the long. And if you've seen the last video, the October seasonal tendency is looking pretty good. I mean, the low actually came in on the 22nd of September, or the 9th, yeah, so September. So like a week early, but it doesn't look like we're going to do that October crashing low. And most times in October we rally into the new year. So I think that some stable growth here, some good natural organic growth, just dip down to 250 could present another buying opportunity because that's where the liquidity is. And then we would hunt some more liquidity, which would be right here. You know, you see this liquid area, and you see how it provides resistance. And yeah, that's just what's going on. What else do I have to say? No, I don't really have anything else to say. So that's gonna be it. I thought it would be longer. I probably forgot a lot of stuff, but I think that's cool. So until next time, you know, I need a tagline. But peace, man. Have a good trading session, you know what I mean?